Sorry, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to get you what you need to know before you roll, and that's going to start out with the economic data, see how that impacts the overall markets with a little market analysis. During that, we'll sprinkle in some geopolitical fodder around that all out, and then finally talk about some option strategies that we could implement in our portfolio based on these assumptions we come up with in our analysis. All right, so without further ado, let's get on with that. I'm going to try and do a couple of things while I'm doing this because I forgot to set it up to where I can share my screen. One of the things that we saw yesterday was that there was a lot of lack of volume, really, and lack of follow through. And I talked about how we could really see some downside ahead of the FOMC meeting. It seems like we found a little bit of a bottom here, not quite as far down as I'm really expecting us to go here. Today, we got a couple of things going on here. We've got some earnings, didn't do so well. Starbucks, Lyft, and a few others kind of pushing down. I think the broader feeling right now with the earnings is they're expecting a little bit worse, but I think if we continue to see this, it's going to exacerbate this downside move here. I think we've had this pullback. Some folks are right now just saying, okay, are we pricing this in already? I don't think so. I think there's going to be another leg down here. So without further ado, not really a whole lot of economic data going on today, other than we do have the FOMC meeting. That's going to be basically a 50 basis point move. It's pretty much in the books already for the most part. We do have the Institute for Supply Management. That's something I want you folks to keep an eye out on because that is a main driver of our economy. Service sector and ISM is the Institute for Supply Management, forward-looking Purchasing Managers Index. Keep your eyes out for that. But most people are probably going to be juking and jiving, trying to get their portfolios hedged ahead of this 50 basis point move. So I don't think we'll really see a tantrum here today. We do have China and Japan back in the market, so we will probably see a little bit more volume coming in here. All right, crude oil moving a little bit higher, not a whole lot to see here. I want to get to overall stocks here real quick because I think we got a couple opportunities in here with this volatility as high as it is. The volatility is even higher during this earnings cycle because of everything that's going on in and around the world right now. So are we finding a bottom here in gold? I'm really surprised. I've been talking about this cash grab, it feels like, in the markets because equities are sliding. We usually see some money flow into gold or even Bitcoin. Neither of those is really happening. So it feels like folks are stockpiling cash right now. That is not really a good sign for the overall markets, obviously. Bitcoin is starting to make a little bit of a move. I do not believe that's where people are parking their cash with the equities starting to come off. All right, here's where we were talking about. I thought for sure we had to test this 32,300. We did get the 32,000 very close to that yesterday there, as you can see with the low there coming in with the 3 handle, 32,358. I'm pretty darn close for guessing that number well in advance there, but we haven't quite gotten to that point. We might end up revisiting that because we came up short on all of these, and I believe that it's just a target that's got to be traded. This 100%, that's basically from 2016 low to the pandemic high, and then everything else based on that is a measured move. So this is where we're looking at that pandemic high, 12,500. That's why I believe we could just have to revisit that on a pullback. Again, E-mini S&Ps, very similar. We came short of that Fibonacci there. One might say that my Fibonacci are off a little bit. I probably should have extended it up there, and that measured move might have brought this up a little bit higher, but I think that it would have just gapped them a little bit even more there. Maybe a little bit higher. It could have come close. All right, E-mini S&Ps, nothing really to see here. And as a matter of fact, I think you're going to continue to see mostly consolidation heading into the FOMC meeting. As we're expecting a 50 basis point move, I don't think that we're going to get any different. And we'll probably not hear a whole lot of bearishness or dovishness around the Fed. It's going to be very hawkish, which means towards that interest rate hikes for probably 2-3 more. We're probably going to get to about 2%, maybe 2.5% if they want to really press the pedal there. All right, so Lyft is really what I wanted to talk about. We can take this back to a couple of years here on the Fibonacci, or I'll pull up a Fibonacci. Let's drop. I don't even know what I'm doing here. I'm trying to talk and think at the same time. It's not working. So let's throw a Fibonacci on here just to get, it's going to be pretty dirty, but let's just throw it on there like that. We can see we got a support level here right at around 27. Well, I can tell you that right now we are already blowing through that as their earnings came out not so great, and the earnings call wasn't even anything inspiring. But with that said, the pandemic low not too far around the corner. And do I think that Lyft and Uber are going to go by the wayside? I don't. I think that they're here to stay. Do I think that being an Uber driver and a Lyft driver is really getting $24 an hour? I don't think so, because I think some of that goes into the maintenance of the car and stuff like that that isn't really being counted by Lyft. So with that said, we're dropping down here to around $22. Now, I'm looking with this volatility extremely high. We just had the earnings. I think the volatility is going to come out. Hopefully it doesn't come out before too many minutes after the open, because I'm working something in the markets here with the drop down here. I'm looking at the 17.5 calls. And I'm going to try and get them for about 50 cents. That's pretty close to the at the money, maybe a little bit healthy there for a premium pre-market. So I'm going to be playing around with that, trying to get involved. At the end of the day, selling puts, high volatility, I can get further away from where the underlying is trading. I think we might get a little bit of a spike here in volatility right off the open before we start precipitously seeing that come out. So hopefully I get that little bit of spike right off the open. Looking at the the 17.5 calls in here in Lyft. So just a small order in here. If I get hit on it, I'll start reevaluating it. But like I said, it's in the May, so shorter duration inside that 45 days to expiration, selling the May 17.5 puts in there for 50 cents. Pre-market, got it preloaded. I'm going to keep my eye on that and try and play around with it. Another one that's not doing too well today is Starbucks. And, they were a little bit behind the iced coffee game. In the meantime, during that, we've been seeing Dutch Bros come into the markets. All right. It's really big out here out west. As a matter of fact, no kids go to Starbucks anymore. They go to Dutch Bros. That's where all their friends are, and they get their drinks and all of that. So it's a different experience than what folks like you and I are accustomed to with Starbucks. They are gravitating towards that. So while I've said earlier on the IPO of Dutch Bros, that was a good one to get into, I'm still involved there. I think that we're going to see a bit of a inverse relationship here between Starbucks and Dutch Bros going forward. So hope that helps you guys out. I would be looking to sell calls in Starbucks and sell puts in Lyft. So hope you guys all can take advantage of some of those things, maybe even a put spread. I'm going to be drilling down on those types of components, these two different option strategies the next 2 weeks in my webinar. So please, while you're watching this video, make sure you hit that subscribe. Right next to it, there's a bell. Hit the bell, because that will let you know when I come in unannounced. All right, like this video. So check that out. Hit that like button for me before you go. It spreads the word with these little bots. All right, feed the kitty. If you can't take that, take it easy. Oh, look at that. I knocked it right back into place. Bye for now.